Hey, this is Warren Redlick. I'm going to show you how much Tesla is going to grow over the next 10 years out to 2030. It starts with batteries.
This is just talking about Tesla internal cell production. We will continue to use our cell suppliers, Panasonic and LG and CATL. So this is 100 gigawatt hours supplemental to what we buy from suppliers. It allows us to make a lot more cars and a lot more stationary storage. And then long term, we're expecting to make on the order of 3,000 gigawatt hours or 3 terawatt hours per year. I think we've got a good chance of achieving this actually before 2030, but I'm highly confident that we could do it by 2030.
Elon Musk and Drew Baglino set out a plan for how Tesla is going to make 100 gigawatt hours of batteries in 2022 and reach up to 3 terawatt hours, 3,000 gigawatt hours of batteries in 2030. We know how many gigawatt hours of batteries they're going to have between what they produce and what suppliers get them. We know how many kilowatt hours, roughly, each product uses, each car, each grid storage device. We know that. We know the rough price for each product they sell. That makes it really simple math to go from the amount of gigawatt hours of batteries Tesla uses in a year to the amount of revenue that Tesla generates in that year. And it's not hard to go from there to Tesla's share price in that year. Will the share price hit $1,000 a share, $5,000 a share, $10,000 a share or more? This is what we're going to talk about in this video. Before we get into it, I would like to thank Bradford Ferguson of Halter Ferguson Financial and my other Patreon supporters for their generous support that helps this channel grow. Please look in the description below for a link to my Patreon page and also for merchandise like my Elon Be Less Wrong t-shirt. We're always wrong. Our goal is to be less wrong. Now let's look at how we're going to do this. Are you ready? Let's go! Remember, this is not financial advice. You need to do your own research. This is just my opinion. The big challenge for Tesla has always been that they've been battery constrained. They don't have enough batteries to make all the products they can make and sell. It is the fundamental constraint, the limiting factor. Check out what Elon has to say.
We do see the fundamental constraint as total cell production. That's why we're putting so much effort into making cells, because it's the fundamental constraint. We're not getting into the cell business because we, just for the hell of it. It's because it's the fundamental constraint. It's the thing that is the limiting factor for rapid growth.
While everything Tesla does is hard, scaling battery production has been the hardest and continues to be the hardest thing. They know how to make cars. They know how to make grid storage devices. They know how to make and sell solar panels. All of those things they can do better, but they basically got those down. It's the batteries that are critical and the batteries that are holding them back. At this point, the cars are so good that if Tesla didn't even improve them, they would still sell. So scaling production would just be taking a factory you've already made and building another one like it. They're doing more than that. They're improving more than that. But if all they did was just build new factories to make cars the same way, they would still be winning, but they would need the batteries to support that production, and they don't have it yet. Now, of course, each car factory is not the same. Tesla is continually improving how they make factories and how they make cars. The improvements they are making in car manufacturing are amazing because Tesla already makes the best cars. The Model S and the Model Y in particular are pretty widely recognized now as two of the best cars in the world, if not the two best cars in the world. Tesla grid storage is already cost competitive. They're probably, the Tesla Powerwall and the Tesla Megapack are already the best products on the market in their segments. Tesla cars are already the best products in the market in their segments. They just need to make more, and they need more batteries to do it. Batteries are the fundamental constraint, the limiting factor, because there just aren't enough batteries being produced to satisfy the demand for the cars and the grid storage that are made with them. As battery production scales, the cost of the batteries is going to come down. We saw a lot of that on Battery Day. The cars and Powerwalls and Megapacks and Tesla Semi, they will all become more cost competitive as those prices fall. The demand is going to rise even more, and it's just a question of supplying batteries. So the model I'm about to show you really understates the performance because it doesn't really look at profits. We're going to look at revenue, and we're going to translate revenue to market cap and share price. In my view, Tesla's profits are going to go up substantially as the company grows, as time goes on, for various reasons. And as profitability grows, that's going to push the share price to revenue ratio higher. As the company grows, the profitability grows more, and the share price grows even more. Tesla is learning to build lower cost factories that build more cars faster. If you build a $2 billion factory that produces 500,000 cars a year for 10 years, that capital expenditure works out to $400 a car if you don't consider the interest costs. Now, suppose you learn from that and you're able to build a $1 billion factory that produces 2 million cars a year for 10 years. Now your capital expenditure per car is down to $50. You're saving $350 a car, which means you're able to charge a lower price and make more profit on the same car. Not only that, Tesla is building its factories closer to its suppliers and closer to its customers, which lowers costs further. The cost of delivering the car to the customer is less. The cost of transporting the materials from the supplier to the factory is less. The timing is better. All of these things are better, and they lower Tesla's costs and enable lower prices, and they enable more profits. Tesla is improving how they make cars, eliminating parts and eliminating processes. Fewer parts and fewer processes means the cars cost less to make. It means you're able to make more of them quicker. The Berlin Model Y, the Model Y that's going to be made in the Berlin Gigafactory, is going to have hundreds of fewer parts than the Model Y that's currently being made in Fremont, California. It's going to have fewer processes, fewer steps along the way. And that means the Berlin Model Y is going to cost much less to make. That's going to factor back into Fremont, but the point is the Model Y is already a cost-competitive vehicle, and now its price is going to come down a lot more. Cybertruck's even better. It doesn't need a paint shop. It doesn't need stamping and pressing machines. The cost of making Cybertruck's going to be even less. They're going to be able to make them faster. Some of these savings reduce the price of the cars and the price of the grid storage, and some of those cost savings go to increasing the profit, the margins on each vehicle. And as the role of software grows in Tesla's products, whether it's full self-driving or auto bidder, the profitability, the margins go up because software costs nothing to make an extra one. So the value of that to the business goes up, and that just increases things more. I'm going to talk about this later in the video, but the value of autonomous driving software, of the Robo-taxi network, the profit in that is astonishing. The model doesn't really focus on that, but I'll talk about it a little in this video. If I'm correct about the value of the Robo-taxi network in terms of increasing profits, the numbers you're going to hear from me, which are already spectacular, these numbers are going to be low, and Tesla's going to grow even more than that. Check out my Tesla will stop selling cars video for more on that concept of the Robo-taxi network generating so much profits and raising share price so much. So the revenue per kilowatt hour model starts with a ballpark guess, and I think it's a reasonable, well thought out guess, as to how many batteries Tesla is going to have in a particular year, and then translate that to what products will Tesla make, what's the price of those products, and how much does that add up to when you multiply it by all the vehicles and grid storage items they make, how much does that add up to in revenue for the year? Tesla is starting to produce its own batteries, but it also receives batteries from suppliers, and that's going to continue to grow as well. Once we have battery supply, it makes sense to look at what products is Tesla going to make with those batteries. We know how many kilowatt hours of batteries each product uses. We know a Powerwall uses 13.5 kilowatt hours currently. It may go up, it may go down, but it's in the ballpark of that. We know that the Tesla Model 3 at the low end has a 54 kilowatt hour pack in the United States. It may be lower in China. And we know that at the high end, it's 75 kilowatt hours. And these numbers can change a little, but it gives us an idea. We know that the Model S and the Model X have 100 kilowatt hour packs. With that information, we can estimate how many of each product Tesla will make to add up to the number of gigawatt hours of batteries they have for that year, and that helps us come up with revenue estimates. I start with the year 2022 because Elon Musk and Drew Baglino at Battery Day gave us a description of their target for 2022. We don't have a target for 2021 yet, so I'm skipping over 2021. 2022 is a good base year because we have this number. that Elon and Drew said Tesla will produce 100 gigawatt hours of high nickel batteries in 2022. Using other information that we have, I'm projecting that Tesla's suppliers, their battery suppliers, will supply them with another 100 gigawatt hours of batteries. I'm talking about Panasonic, CATL, and LG Chem. Panasonic produces about 35 gigawatt hours now in the Nevada Gigafactory, and they're planning to scale that up to 54 gigawatt hours. LG Chem and CATL supply batteries to Tesla in Shanghai for the vehicles made there. LG Chem has already said they're going to increase battery production for Tesla, and they're going to make batteries in the 4680 cylindrical format that Tesla has set forth as the standard that they're going to be using for their vehicles in the future. Also, Elon Musk at Battery Day described Tesla's 100 gigawatt hours of battery production as supplemental to the batteries that are going to be supplied by Tesla suppliers.
We will continue to use our cell suppliers, Panasonic and LG and CATL. So this is 100 gigawatt hours supplemental to what we buy from suppliers.
It might be reasonable to expect that the suppliers will produce more than 100 gigawatt hours of batteries to go along with the 100 gigawatt hours of batteries Tesla makes. And we're going to see Tesla actually use more than 200 gigawatt hours of batteries. I'm going with 200 gigawatt hours for this estimate. There's a good chance I'm low and we're going to see more than 200 gigawatt hours. And my numbers, this is the start, so everything flows from this, so it might get even bigger than what I'm saying here. Now, I'm talking about 2022 first. I made a video recently where I talked about specifically about 2022, so check that out if you want more in-depth on specifically the year 2022. That's a good background for the model that I'm using here. In that video, I looked at a range of allocations for how Tesla could put batteries in Model 3, Model Y, Powerwall, Megapack, Tesla Semi, put it all together to come up with a number that when you added them together, it came up to 200 gigawatt hours. And that leads to a range for revenue, depending on how you allocate the batteries, what the revenue is going to be for 2022. So at the low end, I'm estimating that Tesla will achieve $120 billion of revenue in 2022 based on this allocation you can see here, where Tesla makes 900,000 Model Ys with an average battery pack size of 65 kilowatt hours, just one example. They make 800,000 Powerwalls in this example. When you combine these with the price of the products, you come up with $120 billion in revenue. It's pretty straightforward. I'm leaving all this other revenue out, like service and software and revenue generated by Megapack installations like the Hornsdale Reserve, as I'm just focusing on the product. So really, again, my numbers may be conservative and the actual numbers may be significantly higher than what I'm saying here. Now, at the high end of the model I'm using, where you use a different mix of products and you include full self-driving revenue, which I didn't include in the previous number, and you include some revenue generated by the Robo taxi network, which is small for 2022 in my model. And I'm sure some people think Robo taxi revenue is not going to happen at all or not going to happen that soon, but it's really small in this particular model, so it's not significant. This comes up with about $145 billion of revenue for 2022. Now, this is where people start to have trouble when I make these projections. I get comments on my videos that say, well, they can't possibly get that big. And, look at the revenue. If you just look at revenue for the last 4 quarters, Tesla has less than $30 billion in revenue for the 4 quarters, for what's effectively a year. So for Tesla to do a minimum of $120 billion in my model means a minimum of 4x growth in 2 years, which sounds crazy. And I understand that it sounds crazy. And even if you take Tesla's record third quarter that we just had with almost $9 billion of revenue, and you took if you took 4 quarters of that, you'd get $35 billion in revenue. Getting to $120 billion or $145 billion is a huge jump, and I get that people have trouble with it. But I'm going to explain shortly why this growth in 2 years is not crazy. I'll get to that, just give me a minute. So now you take those revenue estimates, $120 billion or $145 billion. Tesla is currently trading at about 10 times its annual revenue. It's actually more than that, but let's say it's trading, the market cap of Tesla is more than 10 times its annual revenue. So let's just use 10 times, which is less than what we're doing now. Again, trying to be conservative. If Tesla grows to $120 billion in revenue and you do 10x, that means a market cap of $1.2 trillion and a share price of $1,200, up from the current around $400 a share. If you take the $145 billion number, you're getting close to $1.5 trillion in market cap and a $1,500 share price just in 2022. Now again, that 10x number that I'm using is conservative. One, it's lower than the number we have today. Two, we're expecting increasing economies of scale. We're expecting increasing profitability, increasing margins. All kinds of things are going well for Tesla right now. So I think I'm being conservative here when I'm saying in 2022, we can expect to see a share price of $1,200, $1,500, or maybe even $2,000 a share. One of the most common questions or objections that I get in comments on my videos or I get on Twitter is, how could Tesla possibly grow this fast? It seems crazy that Tesla could go from $30 billion in revenue or $35 billion in revenue in 2020 to 120 or 145 billion in 2022. It's not crazy. Let's start with 2020. 2020 is an odd year. For starters, Tesla only has 1.5 factories. They have the factory in Fremont, and they have half a factory basically running in Shanghai in the early stages of developing that factory. And 2020 was a horrible year in terms of COVID impairing production. It's horrible for many reasons, but for Tesla, it was a tough year, impairing the production of vehicles, impairing the delivery of vehicles, impairing demand. So the 500,000 or so vehicles we expect Tesla will deliver by the end of 2020 is artificially low. And they're doing that from 1.5 factories, where in 2022, we expect Tesla to be running 4 factories. We're going to have Fremont with higher productivity than it had in 2020. We're going to have Shanghai with 2 factories, Model 3 and Model Y, not just Model 3. We're going to have Berlin producing Model Ys and Model 3s. We're going to have Austin producing Model Ys, Cybertrucks, and probably Model 3s. We're not sure where Semi is going to be produced, but it's a much, much larger volume of production. On top of that, the newer factories operate more efficiently than the Fremont factory. The Berlin factory and the Austin factory in particular are adopting new production methods that are going to be much more efficient. Fewer parts, fewer processes, making it easier to make more vehicles faster. The Berlin Model Y is an example. They're taking the basic design of the Model Y that's being produced in Fremont, and they're doing casting of the front and rear and joining it with a structural battery pack. It eliminates hundreds of parts and eliminates many processes. It makes this go much quicker. It means the Berlin factory will be much more efficient. And the same thing is true of the Model Y factory that's going to be built in Austin, Texas. And keep in mind, the Model Y is already extremely competitive now. The Wall Street Journal called it the best car in the world. So it's going to get better, and it's going to cost less to make. With these updates and with local manufacturing delivering to local customers, with local suppliers reducing costs, all of these things are going to be better. And the Model Ys produced and the Model 3s produced in Berlin and Austin are going to be produced in higher volumes and delivered more efficiently. And then you go to Cybertruck, which is even more streamlined because there's no stamping and pressing machines and there's no paint shop. So Cybertruck should be able to be produced in very high volume. Tesla Fremont has a ballpark maximum capacity of 600,000 vehicles a year. I think it's going to get some upgrades and be able to I think it's going to get some upgrades in its production processes and be able to produce more in future years. But right now it's limited to around 600,000 vehicles a year. Berlin and Austin will probably be able to produce 2 million vehicles a year or more each. When you add that together with Shanghai and Fremont, you're talking about a potential capacity of over 5 million vehicles a year. And the numbers I'm using for 2022 are only about 2.5 million vehicles. So we're not even close to the capacity that these factories will have in the long run. And that's not even considering that Tesla is probably going to build more factories in other locations. And this doesn't even consider the radical growth that Tesla has been talking about for grid storage and solar.
When you look around the neighborhood in the future, decade from now, what do you want? What products are going to make your life better? What future do you want? And I think a future where we've got beautiful roofs with generating energy that are tough and resilient and better in every way than a regular roof, and alive with energy, That's the future we want. The solar roof is a killer product. This will become obvious next year.
So yes, Tesla can grow this fast, and maybe they can grow faster. As they're generating money, as their cash is coming in, they have something like $14 billion cash pile right now. They could decide to build another factory, another $1 billion, another factory they can produce more. The growth is there. The fundamental constraint remains battery production. They need more batteries so they can produce what they need. They haven't had the batteries. That's what's been restraining the growth. So if Tesla and its suppliers can produce 200 gigawatt hours of batteries for Tesla to use to make products, Tesla will be well over $1,000 a share and may very well reach $2,000 a share in 2022. It really starts to get fun when you project this model out into the future. When you start heading out into 2024, 2025, out to 2030. But first I want to talk about 2023, just one step ahead. A big question is going to be how fast can Tesla grow and for how long? Elon Musk pretty consistently talks about 50% annual growth. The path from 100 gigawatt hours to 3 terawatt hours from 2022 to 2030 actually sets forward a growth rate of 53% a year, and Elon said it might be quicker. So he is very, very aggressively pursuing very fast growth. And it's not just him. Drew Baglino is on the stage with him. This is a big thing with me. People talk about Elon time. When it's just Elon talking, it's one thing. When the team is with him, when the team is saying the same things, that means a lot more. It's no longer just Elon time. Now, going out to 2030, if we continue 50% growth, the numbers start to look insane. But I'll get to that. Let's stick to 2023. Applying 50% growth from the 200 gigawatt hours in 2022 means Tesla would have to allocate 300 gigawatt hours of batteries to the various products. The other thing that's interesting in 2023 is we start to see the Tesla Compact, the mystery vehicle that they half revealed at Battery Day, but they didn't really give any details yet. They called it a Robo taxi. They said it was going to use iron phosphate batteries.
We're confident that long-term we can design and manufacture a compelling $25,000 electric vehicle. It was always our goal to try to make an affordable electric car. And I think probably, like I said, about 3 years from now, we're confident we can make a very compelling $25,000 electric vehicle that's also fully autonomous.
And when you think about the $25,000 price point, you have to consider how much less expensive it is to own an electric vehicle.
Yeah.
So actually, it becomes even more affordable at that $25,000 price point.
Yeah.
Taking that 300 gigawatt hours into vehicles and grid storage, I come up with numbers of 2.5 million to 3 million vehicles in 2023. And this is where we also start to see the massive growth of solar and grid storage. At the low end with this model, we see 1.2 million Model Ys, for example, in 2023. And you add it all up and it comes up to a revenue of around $166 billion in revenue for 2023. Again, this is the low end estimate. At the high end, adding in revenue from full self-driving, which I left out of the previous number, and adding in revenue, some revenue still small for Robo taxi, that brings revenue close to $200 billion. My numbers for 2023 include a small number for the Tesla compact robo-taxi vehicle that Elon and Drew teased at Battery Day. I'm keeping that a small number for 2023 because it's going to be the beginning of production of that vehicle, so it doesn't have a big impact on the 2023 numbers. So when you apply that 10x from revenue to market cap, we're looking at a share price from $1,600 to $2,000. And again, I think this is being conservative. We could see $2,500 or more. 2023 is when we might expect robo-taxi profits to start to take off, and the margins on the robo-taxi business are huge. Elon said other margins are going to be comical compared to robo-taxi margins.
In terms of margins, all of these margins are going to look pretty comically small when you factor in autonomy.
I'm going to look at the big picture in a minute, but let's just look at 2024 for a second. With the 50% increase, we're now talking about 450 gigawatt hours of batteries that Tesla needs to allocate between vehicles and grid storage, maybe other products that I haven't thought of. That roughly translates to a ballpark of 4.5 million vehicles. My revenue estimates start at $230 billion. When I get more aggressive and I add in full self-driving and robotaxi, start to see revenue approaching $280 billion. I also took a really aggressive approach to how the compact might be introduced, and that the compact robotaxi might have a much smaller battery, which allows for far greater production. And you could see 1.3 million of these robotaxi models produced in 2024, which is now the second year of production for that vehicle. Taking that approach brings revenue up to $291 billion for the year 2024. So now we're talking about a market cap approaching $3 trillion and a share price approaching $3,000 a share. And again, this is conservative if we take into account the possibility of robotaxi profits outperforming, and that would drive share price much, much higher. So even in a fairly conservative approach, I'm very optimistic here, but I think I'm also conservative in other ways. This is a bull case, but it's not the crazy bull case. And we're talking about $3,000 a share in 2024, up from $400 a share in 2020. And I think it's probably going to be bigger than this. I think I'm being conservative, so we'll see. So going further out in these models, it stops making sense to try to allocate batteries to different products, because the products that Tesla will be making will probably be different when we get out to 2025, 26, 27. There's going to be new products we can't even imagine. So I've charted out three curves here. Now, the blue curve is the very conservative curve that's less than the numbers I've talked about here. My conservative number for 2022 was $120 billion in revenue. But here I'm using $100 billion in revenue to be ultra conservative on this blue line, on the blue line at the bottom here. And I'm using a lower growth rate of only 30% a year. So I'm saying, let's suppose Elon is being way too optimistic. Let's suppose the growth isn't going to be anywhere near what Tesla's talking about. And we started $100 billion in 2022, and we mapped that out. Where does 30% growth take Tesla out to 2030? The next line here, the green line, starts at 125 billion, which was my mid-level estimate for 2022, and says, let's go with 40% growth. They're not going to achieve the 50% growth that Elon and Drew are talking about, but 40% growth is still pretty good. And you can see that leads to much larger numbers. And then up high, the silver line starts at $150 billion for 2022 and has the 50% growth. And as you can see, the outcome in 2030 is dramatically different depending on which assumptions you use. This is why exponential growth is really, really exciting. And the rate of exponential growth matters a lot. 50% growth produces a lot more growth than 30% growth when you go out over 10 years. So the funny thing is, the blue curve looks small, but it's still pretty amazing. If you look at that blue curve, if you look at the numbers, you take $100 billion and you increase it 30% a year for 5 years out to 2025, you get $220 billion in revenue in 2025. Revenue starts to approach $500 billion in 2028. And revenue goes over $800 billion in 2030. We're talking about a company that's currently producing about $30 billion of revenue, and we're saying 10 years from now, with a fairly conservative approach, it's going to be an $800 billion revenue company, nearly 30 times the size and 30 times the share price. This is what exponential growth does. Taking the medium view, the green line on the graph next to me, we start at 125 billion, we go with the 40% growth rate. Revenue approaches $500 billion 2 years earlier in 2026. And revenue approaches $2 trillion in 2030. $2 trillion in revenue means Tesla would be approaching a $20 trillion market cap, and the share price would be $20,000 a share. And we're not even on the big optimistic estimate yet. The real bull case is the silver line, which starts at $150 billion in 2022 and increases at 50% a year. Revenue goes over $500 billion in 2025, just 5 years from now. And revenue approaches $4 trillion in 2030, which would be a $40 trillion market cap with the multiple we've been using, and the share price would be $40,000 a share. So this is why Elon keeps talking about exponential growth. And this 50% growth that we're talking about is the growth that Tesla is aiming for all the way out to 2030. There's a theory that eventually the curve bends back, it slows down, but they're not aiming to slow down at least not until 2030, because the goal is to replace the global fleet of internal combustion engine vehicles with electric vehicles. And this is only making a dent in that goal. This requires other companies to come along and make more EVs and make ICE vehicles even more obsolete and get them off the road to clean our air and make the environment better. I want to stress here that the model I just showed you does not fully account for robo-taxi's potential. I believe Tesla would make more money if they used the stop selling cars and just run robo-taxis approach that I mentioned earlier. Puts every car it makes into its own robo-taxi network and runs them as robo-taxis and makes revenue on them. Every vehicle runs 100,000 miles a year for 10 years, and Tesla makes $50,000 a year per car, and the profits are huge. The numbers are staggering if you get into that model. So I'm not even going with the biggest model, and I've got $40,000 a share potential in 2030 from $400 a share now. We're talking about a 100x gain. The robo-taxi strategy I think Tesla should follow, I'm not saying they will, it's the one I think they should follow, would generate more profits, make Tesla even more valuable, and it accelerates the transition to sustainable energy more than selling cars to people who are going to keep them in their garage. A robo-taxi runs 12, 15, 16 hours a day, and it replaces more internal combustion engine vehicles. It replaces about 8. If I buy an EV and it sits in my garage half the day, and even if I put it out on the robo-taxi network 6 hours a day, it's not replacing as many ICE vehicles as a robo-taxi does. An aggressive robo-taxi model would yield much higher revenues, staggering profits, and a share price in 2030 of over $100,000 a share. I know it sounds crazy, but the numbers just add up to that. Now, please remember, I'm not qualified to give investment advice. Just telling you what I see, putting the numbers together that I see, and giving you my opinion of where it's going based on the facts that I see, what Elon and Drew Baglino say they're going to do, and the numbers that seem transparently obvious. I don't think this is rocket science, but it's my opinion. You got to do your own research. You got to do your own analysis. I hope mine helps you. I want to stress here that I was trained to believe in portfolio diversification, that you don't want to keep all your eggs in one basket. I have a lot of my eggs in the Tesla basket. I know people who have all their eggs in the Tesla basket, and that's not generally a good strategy. Generally, you can be a successful investor by buying several assets, by buying exchange-traded funds or mutual funds, index funds that invest across a broad range of companies. I have been successful at that. I have made money with that approach. And many people have made money with that approach. The market goes up and people do well. Index funds in particular are a great way of achieving a diversified portfolio at low cost. And that is the standard advice that most investment advisors would give you. I think that's what I was trained. Again, you should get your own advisor. I'm not qualified to do that. I'm just telling you what I think and what I hear. The theory is that some assets will go up in value and some assets will go down in value, but over the long haul, the diversification balances everything out and you get the growth of the market as a whole. The diversification protects you from the risk of being in only one stock that fails. It protects you from the risk that people who bought stock in Enron or were employees of Enron had all their wealth in Enron and then Enron collapsed. You don't want that to happen. I don't see that happening with Tesla, but it can happen to anybody. So compared to the diversified portfolio investing approach, there's another approach. When you invest in normal stocks, you're hoping for a 2x or 3x gain over the long term. Getting a 10x gain is fantastic if you get that in a stock. And you're hoping your diversified portfolio gives you some of those 2, 3x stocks to make up for the stocks that only go up 10, 20, 50% and the ones you lose money on. But every once in a while, a stock comes along that greatly outperforms the market. And if you can see that stock early, the money you make on that stock is crazy. And so some people feel it's worth taking a risk on a stock that looks like it's going to grossly outperform the market. If you bought Apple or Microsoft in 1986, you would have paid about 10 cents a share. After all the splits that Apple and Microsoft have gone through over the years, you would have paid about 10 cents a share in 1986 for a share that's in today's market. Apple is currently trading over $100 a share. That's a 1,000x gain. Microsoft is trading over $200 a share. That's an over 2,000x gain. Somebody on Twitter asked the question, what 3 words would you tell your 18-year-old self if you could go back and you could only say 3 words? And my answer was buy Microsoft stock. Because if you put $1,000 in Microsoft stock, you would have had $2 million today. And that $2 million doesn't even include dividends, so it's substantially more than that. The problem is it's impossible to know which stocks are going to go up, which stock is going to be a 2x stock, which stock is going to be a 3x stock, 10x. You can't really know in advance. Sometimes you see something that looks like this looks like the one. So when I see a company and I get a feeling and I have reasons, not just a feeling, but I have reasons why I think this company is going to do a lot more than the average stock, I buy in. And I did that in 2013 with Amazon. I bought stock in Amazon in 2013. I'm up 12x. But I made a mistake when I bought Amazon. I didn't buy enough. I didn't believe in myself. And my other big mistakes was I should have known, or I did know, that Google was going to blow up at its IPO, and I should have bought stock at the IPO, and I didn't. I do own Google stock. I have made money on it, but I would have made a lot more. I had reasons why I should have known and anticipated and bought stock in Google. When you see that opportunity, when I see that opportunity, now I jump on it, and I see that opportunity now with Tesla. I saw that opportunity a couple years ago with Tesla, and I'm holding it now. I decided not to make the same mistake with Tesla, so I bought a lot more stock in Tesla than I had bought on Amazon. What I see in Tesla is a company with massive growth potential. Not much that can stop it. I can't see anything that can stop it. And it's doing all that while it's making the world a better place. It's spectacular. Tesla's production capacity is growing fast. Their cost of adding production capacity is getting lower. It's getting easier for them to build more factories faster. Unit costs are declining, the cost to make an individual product. The factories are getting closer to the customers. The factories are getting closer to the suppliers. The supply lines are shrinking in so many different ways. It's improving the operations of the company, both in terms of costs and timing. Tesla's cars and grid storage products are already cost competitive. So making all these improvements allows Tesla to lower prices if they want to. They don't really have to. So far, they sell every car they make. They sell every grid storage device they make. It's just a question of having enough batteries to make more of them. So adding more batteries to the mix means Tesla makes more vehicles. Lowering the cost just a little massively increases sales. It's not even clear they need to cut prices at all. They probably will cut prices, but it's not clear that they need to. Elon has said he wants to make the vehicles more affordable if he can. So Tesla's future is very bright. As a long-term buy and hold investor, I am really optimistic about Tesla's future. And that's why I think Tesla's going to go up like crazy, and we're going to see insane share prices in the future based on insane revenue, based on insane growth in battery production. And that's the model I wanted to present to you. So I've got some great videos coming up in the pipeline. Please subscribe to check out what's coming. Of course, check out the merchandise, shirts like Elon Be Less Wrong. Please support this channel on Patreon. It's right here and it's in the description below. The merchandise link is in the description below. Anything you can do to help this channel is going to help me make more videos to give you more quality information like I hope you feel you got here. Please check out my other videos to see what else I've done. Please subscribe. Please like this. Share this video with your friends. Let your other friends see the information I'm presenting and talk about it. And of course, in the comments, tell me what you think. Let me know. People love to comment on the videos. I love engaging with them, and your comments help me shape future videos. Thank you very much for watching.